Good afternoon. If we were in Aggie land, I would say howdy. Welcome to Texas A&M International University. I am Pablo Arenas, president of TAMIU, and it's great to have you all here. We appreciate you coming. This is one of our premier, our showcase events that we have during the year, the Western Hemispheric Trade Conference. It brings people from all over the world, and I know that there's a lot of people this year since COVID that access this online as opposed to coming. But we used to have lots of people who would come from all over the world, and now it's easier for them to sit at home and be part of this conference, and I think that's very great. But we're very, very happy to have everybody here, and I think most everybody has been on this campus or knows this campus. But I always talk about the fact that we have a lot of wildlife on campus. It has nothing to do with our students and dorms, but that it has to do with the fact that we have deer and javelina, among other critters that wander the campus. And as we get closer to finals, we're going to have more of them than we do students on campus. So it's a lot of fun at certain times of the year when we have, especially in the winter, when we have the couple of big bucks. I think we've got a 10 or 12 pointer that wanders around campus over the Christmas holidays that we don't see other times of the year. And I assume that he's that large because nobody can hunt on campus. But we are the largest by percentage Hispanic serving institution in the United States. We're 96% of our undergraduates, over 96% of our undergraduates identify as being Hispanic. And so this is a wonderful opportunity for us to showcase this community, our School of Business, and what we do, and not only but our College of Business does, the School of Business does, in working with our community partners. And I see a number of our community partners here, PNC Bank, Falcon Bank, IBC, who have been very, very supportive of what our School of Business has done and what the university does. They've all been very supportive of what we do as a university. And so, again, welcome. That's all my job is, to welcome you all to come here. And I will turn the podium and the mic over to Dr. Sears.
Thank you very much, Dr. Arenas. I want to also extend my welcome to each of you and my thanks for your attending this keynote speaker presentation today. I would also like to acknowledge the presence of some of our important benefactors and supporters of not only the college, but also the university as a whole. And when I call your particular name, if you'll stand up and be recognized. Over to my right, I have professionals representing PNC Bank. If you could stand up and be recognized. PNC Bank is a strong supporter of the business school here. Their CEO sits on the advisory council. Thank you very much. We also have a table which is primarily IBC, but I'll mention Commerce Bank as well. For most of you that have been here for a while, you know that they co-sponsor with us a very important speaker series throughout the year. They're always present at this conference as well. We had an outstanding speech last night. Some would say it was positive about the future. Others would say maybe they have some questions. But could you all stand, please, and be recognized? We have some of the executive professionals at IBC Commerce Bank. We appreciate you coming today. Last but not least, the newest member of our advisory council is Falcon Bank. Mr. Gilbert Narvaez has brought several of his professional staff with me. If y'all could stand up and be recognized, we very much covet your relationship for a long time. Thank you for coming. I have the pleasure and the honor of introducing our guest speaker today. But before I introduce her, before she gives her presentation, I'd like to talk a little bit about how we're going to handle the presentation and the Q&A session. When Ms. Carmona comes up, after she completes it, I will come back up. We will then begin opening up our Q&A session. We have, in addition to those that are here in this luncheon physically, we do have some online listeners. So Dr. Clark, who is seated, where are you? There he is, over there, I'm sorry. He will handle the online questions. I will try to recognize those here in the room that have questions. For those that are in the room, if you have a question or a clarification, a comment after her speech, if you'll raise your hand, we'll see that one of our students or members of the staff of the business school will bring you a microphone, and then we'll do it that way. Okay? And Dr. Clark will alert me when we have questions online, and so we'll sort of split up the questions as we move, depending upon whether they're in this room or whether they're online. And so we also want to welcome our online listeners today. We appreciate you coming as well. Okay, we have a very interesting speech today from a very interesting person. This afternoon's speaker is Ms. Tonantzin Carmona, who is the David M. Rubenstein Fellow at Brookings Metro. The topic of her speech is quite extraordinary, particularly if you're a finance person in the audience. But she focuses on some important things that are not only of societal importance, but also in a broader way in terms of education. Throughout her professional career, Ms. Carmona has designed and implemented inclusive and equitable public policy solutions to meet the needs of the historically disinvested communities. Her research interests are specific, and they include racial equality, wealth and inequality, public finance, and civic technology. Her most recent research focuses on the risks and drawbacks of cryptocurrencies. So if you knew nothing about this before today, you'll know more when she finishes today. She's particularly focused upon African American and Latinx communities seeking to access financial services for personal building of their own wealth. Ms. Carmona has been cited in many areas by Bloomberg Tax, Quartz, TechCrunch, State Scoop, South 50, and City and State of New York. She has also appeared on NPR Marketplace on a show entitled Make Me Start. She's published articles in Bloomberg and Crain's Chicago Business. She has a prestigious educational background. She earned a BA in political science from Northwestern University outside of Chicago, and she has earned her MPA from the Harvard Kennedy School of Government. So please join me in giving a hearty Laredo welcome to Ms. Carmona.
Well, first of all, I just want to say thank you so much for the invitation to be here with all of you today. As he said, my name is Tonantzin Carmona. I'm a Rubenstein Fellow, part of the Brookings Institution, but specifically the Metro program. And yeah, I've never been to Laredo before, so I was just very excited to be here, to see the school. I love it so far, and I'm very, very grateful. Today's presentation is going to be on cryptocurrencies and U.S. communities of color. I'm very specific about the communities that I'm speaking with because, as many people know, cryptocurrencies are actually global in nature. But I wanted to, at least for the purposes of this conversation, focus on a very specific subset of individuals, in this case, Black and Latino communities in the United States. But should we have questions to kind of gravitate beyond this subset, I'm happy to answer those questions after the presentation. Now, before I get started on that, I wanted to just do some level setting because some folks know a lot about cryptocurrencies. Some people do not. So I just wanted to throw out some definitions before I kind of get started, because these terms will at least be mentioned a few times within my presentation. Blockchain, for example, is something that kind of gets thrown around a lot. It is a distributed ledger that is immutable, meaning that it's very difficult to edit, to delete. You can add things to a ledger, but you can't edit or delete it. And it operates, at least in theory, in a decentralized manner. So just think of a ledger system that's distributed. And then one thing that people often don't know is that blockchains, when we're talking about them, can be public or they can be private. And by private, it just means only a small subset of individuals have access to this blockchain network. If it's public, everybody does. Then the other term I use a lot, obviously, is cryptocurrencies. There's been so many funny commercials when people are like, what is crypto? And so I tend to just add a definition that's a little bit, this can be contested. A lot of the terms in this space are contested, they're fluctuating. And so if you disagree, that's perfectly fine, because that's actually part of why this space is so difficult sometimes to understand, is that it's constantly changing and evolving. But for right now, the definition I'll use is that it's a digital representation of value, whose movements are recorded on blockchains. Some people talk about this value also in terms of ownership. Cryptocurrencies are created, traded, and stored digitally. And there are actually thousands right now of cryptocurrencies. So the most famous one that people know about is Bitcoin, but there's also Ethereum, there's Dogecoin. There's also subsets of cryptocurrencies. Sometimes people talk about stable coins, for example. And those are cryptocurrencies that are pegged to a fiat currency. And then what I would just want to kind of say, and part of why I did this definitional thing to start with, is that oftentimes you'll hear folks talk about cryptocurrency, blockchain, and Bitcoin and use the terms interchangeably, and they're not necessarily the same. And so if somebody says blockchain can solve something, that doesn't necessarily mean cryptocurrencies can solve it, and vice versa. But again, just to reiterate, these terms are contested, they fluctuate, and so if it sounds confusing, you are not alone. So to get started, I will say, I myself, when I entered into this space, did not anticipate studying cryptocurrencies. I actually study wealth and inequality. I specifically was looking at Black-white wealth gaps, Latino wealth gaps. I think there's a lot of room right now to do specifically a lot of work on studying Hispanic Latino wealth in the United States, what the disparities are, what the barriers are, how to build it. But one day, I got a call from a reporter who was asking if I cared to comment on this trend that they were seeing of communities of color, but in this case for this story was Latinos, that were gravitating towards cryptocurrencies, and specifically for wealth building experiences. And I just remember kind of being taken aback, because I was like, crypto what? What is this? And so out of that curiosity, I started digging into this space, and I really came in with just a full open mind. I wanted to understand, how does this function? Why does this work the way that it does? How does it lead to wealth building? And along the same lines as I was doing this, a trend started to emerge with different data that started to point out that there was this trend. Now again, this is just surveys, but there were surveys like the NORC or NORC at the University of Chicago was pointing out that nearly 44% of Americans who own and are trading crypto are people of color. There was another survey that was pointing out from the Pew Research survey that was finding something similar, that there was disparities or differences in the way that people were investing in cryptocurrencies. Many of them were Black or Hispanic, around 21% in their survey. Another one by the Morning Consult was specific to Latinos, Hispanics, and they were finding that 24% of cryptocurrency owners were Hispanic, when about 16% of the US adult population was Hispanic. So that was just an interesting trend that they're starting to see communities of color are gravitating towards this space. And then I will say that this is just survey data. One thing that was true just a few years ago that is still true now is that we actually do need more data. That could be quantitative, but also qualitative data in this space. Right now, a lot of decisions are being relied upon and built upon surveys, which I think are important, but they're just a moment in time. But at least this is what a lot of the journalists were operating around, trying to figure out what is going on in this space. Then there was this 2022 Ariel Investments Charles Schwab survey, which was specific to Black investors. So if you actually do quick Google searches on communities of color in crypto, oftentimes the most data that we actually have are about the investing practices of Black consumers. And this is because they did this massive survey and collected this data that often gets cited. And it's really important because it showed, you know, like 1/4 of Black Americans currently own cryptocurrency, or at least of those that were surveyed. But when you look at the population under 40, that figure jumps to 38%. That's a really high figure. And this is compared to only 15% of white investors who own cryptocurrency and 29% of white investors under 40. Some other things that they noted in this survey, which they do annually, and it is actually about investing more broadly. So if you are just interested in seeing trends about investment practices more broadly, this is a really good go-to survey. They started to add subsets of questions on crypto, and they were finding that part of it was that Black Americans were less trusting of the stock market and financial institutions. They perceived the stock market as more risky and less fair. But I think the last point was, to me, really interesting, which is that about 30% of Black investors believe that crypto is regulated by the government. So this was in 2022, before we started to see these collapses. And that, to me, raised a lot of alarm bells, because look, why would they think that this is regulated when it wasn't? And those are just like really important things to kind of start to think about. And this is what I mean why we still need more data. Is like surveys can capture only so much, but there really is a need for understanding the why behind the numbers. And so I started to do a quick search of just what different journalists were trying to capture in terms of what communities of color were experiencing, why they were gravitating towards cryptocurrencies. And right off the bat, so it's very hard to read, so I apologize, but what you should know is that these are all different quotes from different newspaper articles, and they were all interviewing communities of color, Black, Latino investors, and they were all kind of sharing very similar things. They felt there was a lack of trust with traditional financial institutions, be it for basic banking services, for investing. They felt that there was a lack of access. And because of this feeling that they had, they felt that they were more open to cryptocurrencies. And I'm gonna get into like the risks and the drawbacks of cryptocurrencies. And this isn't to say that, you know, they were necessarily right one way or the other, but the point is this is how they're feeling. And so if they're feeling that there is a lack of trust, lack of access, they are more open to alternatives. Whether those alternatives are better is a really important question. But that was something that came up across the board. You know, somebody was talking about lack of trust in systems, lack of access. As one of them said, I felt I was kind of locked out. And so as a policymaker, that actually kind of, you know, raises my alarm bells to think, okay, so what can we do to make people feel that they have access to these systems rather than going to alternatives that might not be as safe? But of course, this was all taking place when I was doing a lot of this work. When the crypto market was at a high, people were really trusting of the system, people were really excited, there was newspaper articles that were touting the benefits, there was athletes and celebrities and all these people sponsoring. And so not a lot of attention was paid to like the why behind this excitement, at least for certain segments of the population. So then I started to get into try and understand then what is it that makes cryptocurrencies appealing themselves. Like if something doesn't feel like it's accessible, then we need to understand why something might actually feel accessible. And there were a lot of proponents that were talking about the potential benefits of crypto, specifically from a financial inclusion standpoint. So they were saying that, you know, crypto is going to bolster financial inclusion. That could be a very broad statement. Okay, what does that mean? What do we mean when we're talking about financial inclusion? What populations are we talking about, for what purposes? And so as I was digging through, what I ended up finding is that there's actually multiple narratives when it comes to financial inclusion. And so sometimes it's really important to be very specific about what exactly you are talking about when you're talking about financial inclusion. For purposes of today, I'll focus on two, but there were actually really several others, and I'll touch on another one just really briefly. But the first two I'll focus on is that there were two narratives regarding crypto use cases for addressing inclusivity. One of them was crypto can maybe serve the needs of the unbanked populations, which right now in the United States, there's about, I think it's like 5.9 million, 6 million folks, 4.5% of the US adult population, something like that. So it's a sizable population. So they were like, crypto will serve the needs of the unbanked. and specifically to enable them to make financial transactions. Because if you're an unbanked individual and our society is becoming increasingly more cashless, how do you make transactions? Oftentimes people have to rely on things like prepaid debit cards to make a transaction, but those things can be really expensive. And so that is one population that maybe crypto could help by providing an alternative to make transactions easier. Then there was another narrative that was saying, well, actually, no, crypto is going to be good for wealth building. You can build wealth with this new digital technology. Okay, but then when you start to kind of dig through then, they often have competing objectives. So on the one hand, you have one group of people saying you use it to make financial transactions easier, cheaper, safer, etc. Great. So you spend it for everyday goods and services. But on the other hand, you have a group of people saying, no, you need it to hold on to it with the idea that it'll like increase in value over time. So you don't spend it, you hold on to it for you to build wealth. So then which one is it? And is it the case for all cryptocurrencies? Is it the case for some cryptocurrencies? So when I saw these competing objectives, to me that told me is like we have to, again, be very specific about what problem are we trying to solve and for who, what group, because oftentimes these will have competing objectives. And again, a closer examination of these narratives revealed a mismatch between what crypto could presently do versus its potential. That's another one that was often happening during this. You had people who are saying like conflating crypto's potential with its present capabilities, saying that because it could one day maybe lead to wealth building, that it does so right now, even though that's not necessarily true. Or because you could maybe one day use it for financial transactions, that right now that means you should be using it for financial transactions when that's not necessarily true. So all that to say is like one of the important objectives that I had was trying to dig deep into understanding when we're talking about financial inclusion, what do we mean? Who are we trying to serve? That was just a very basic like principle going forward. Then I started to encounter a lot of the risks and the drawbacks. Now, I will say my perspective is one perspective. I aim to add to the dialogue because right now, or at least when I was writing, there were a lot of proponents. There were a lot of people that were caught up in the hype, and I think that, you know, that happens, especially when something is new with technologies. But as a person who deals with and works with communities at the margins of society, I often have to think about what are the risks, what are the drawbacks. Not to say that no, the technology is bad, we should ban it, but more so that we can address those risks and those drawbacks to ensure that people aren't harmed by them. And so what we ended up finding was that if you start to actually look at what is the pain point, that cryptocurrencies didn't necessarily address those pain points. So take, for example, an unbanked individual. If they were to use cryptocurrencies for making a transaction, one of the things that they need, what is the main pain point that they need to be able to make a transaction or that they're missing? Their main pain point is that they need a bank account. Where does crypto provide you with a bank account, first of all? So they don't have a bank account. Okay, so it doesn't provide that. The other piece is, oh, no, but that's not the only thing that they need. They need a way to make faster, cheaper transactions, which is why they have been gravitating to things like prepaid debit cards. Okay. But what we ended up finding was that actually because of the blockchain network, because it's decentralized, sometimes those transactions could take longer, they could be more expensive. One of the main things that often comes out in the news is the volatility. And so you maybe one day can get something that's cheaper or you can get something that's more expensive. But the point was, it was like you don't necessarily always get something that is faster, cheaper, better, etc. So already you kind of already see some stuff get debunked. The other thing that sometimes discussed is that, you know, there's this feeling of like anti-bank sentiment. And so like, oh, I don't want an intermediary. I don't want anyone else touching my money. So that's why I want cryptocurrencies. But what you actually ended up finding was that because a lot of the blockchain networks can be actually very slow and clunky, these new products and platforms get built on top of them. I don't know if anyone has heard of FTX, for example. If you haven't, you should Google it. But basically, they ended up wanting to build an exchange to make trading easier. That is an example of a platform that gets built on top of a system to essentially be able to make it more user-friendly. So all of these new middlemen start to come about, And so that same argument that was saying like, I don't want any middlemen, I want to be able to control my own money. Well, the same things actually started happening with this new technology. So it doesn't even address those pain points. But then on top of not addressing pain points, we start to see a host of risks. I've already talked a lot about the volatility, but this comes up surprisingly little, even though if you're talking about making financial transactions, like if I want to buy something for $2, I want to ensure that it's going to be $2 and not pay like $3 1 minute, $4 1 minute, then the next minute is $1.50. Like I just want a solid number, right? That's me thinking as a consumer. But the volatility really matters if you're thinking about different use cases. Operational risks. This is a very technical term, but the way that operational risks are worth considering is thinking about the fact that now we're entering into not just finance, we're entering into a tech space. So when you get into technology, especially with software, you're actually now dealing with those risks that are specific to technology. If anyone has ever used software, sometimes you encounter bugs in your system and you need help. Sometimes you encounter hacks at the worst end of the spectrum. So these are like a new set of risks that come about when you start to merge finance with technology that you have to account for. And then the third one is just the complexity, the fact that it can be opaque. You know, if we're talking about financial inclusion and making things more accessible, we don't want those things to be necessarily more complex, right? And so you want to be able to have something that's easy to understand. Sometimes these systems end up becoming far more complex, and we think that because it's complex, it must be good. But in fact, because it is complex, it means that we're not fully aware of all of the risks that we could be encountering. And so that ends up becoming something that we need to dig through. And so I ended up finding a few more. And this is, again, like just my policy hat going, because I'm thinking if I'm going to put these products and services in front of people, or if I'm going to tout or support these things, I want to make sure that they're not going to lose their hard-earned money. I think that is like a baseline goal for policymakers, but also for business people that are trying to put some quality products and services in front of people. So in addition to the volatility, a lot of the transactions, again, we were finding that they're very time consuming. Some crypto platforms, so again, these like third-party platforms that get added to a blockchain network to make them more user-friendly actually required things like bank accounts. So right off the bat, people who are unbanked really do not benefit from a lot of these products and services. But there's another part too. The transactions can be expensive. So sometimes people weren't differentiating the difference between a blockchain network, which has its own set of fees. But then when you get these third-party platforms, whether they're digital wallets, whether they're exchanges, whether they're Bitcoin ATMs, they have their own fees. And so when you add them all up, it actually ends up being far more expensive than the traditional options. But a lot of people don't know that because there's no one to regulate it to say you have to put those fees explicitly out there. And like I've already mentioned, there was a lot of examples of within the network itself, bugs and hacks. But then there was also platforms issues. They were experiencing bugs, hacks, scams, and fraud. And then one space that a lot of folks didn't really know about either was that there was a lot of inequitable wealth concentration within cryptocurrency spaces, which that risk is that it can distort the market. So if you think about a cryptocurrency like Bitcoin, you think, oh great, everyone has access to it. And so I'm part of something that everyone has access to. But a lot of reports were actually finding that there's a very small percentage of people who own Bitcoin, a large amount of Bitcoin, such that they're the ones that can actually have control of the market should they decide to. So as much as everyone's saying everyone has access to it, it's still those inequities in wealth. You kind of see the same thing playing out in digital fashion. And then the last one is there's actually a lack of consumer protections in place at the federal level for sure. At the state level, we're starting to see a lot of states try to figure out ways to protect consumers. But a lot of them are also waiting to see, well, what's actually going to happen at the federal level? And this is the piece where a lot of people thought that it was already regulated when it wasn't. Part of my thinking on this is that, you did have, in addition to the celebrities, the athletes, the influencers that were touting this, you actually had a lot of government officials that were touting this. And so if you're a government official, whether they're a mayor, a congressperson, and they're saying, this is safe, this is great, put your money in it. I mean, if you're a consumer, should we blame you for believing your elected official? So that to me was actually really dangerous, and I think a lot of them have walked back a lot of those statements to really try to ensure now we're shifting the conversation from this is all great to how do we start to protect people if they're gonna put their money into this. This table is actually from one of the pieces I wrote. So this isn't about the financial transactions more broadly or wealth building, but one other topic that comes up a lot and I think might be of interest to some folks in this audience is this idea that you can use cryptocurrencies for cross-border remittances. So if you're talking about a regular cryptocurrency, those can be really volatile. That actually might be really difficult to, send remittances abroad. It can actually be more expensive. You're not necessarily sure. So one thing that people have proposed is actually to use stable coins. The stability is the idea of what a stable coin is because it's pegged to a fiat currency. So the idea is it'll maybe if you're using US dollars, it'll be approximately as close to $1 as possible when you're sending money abroad. But again, to the point of fees, sometimes these things happen where we're not aware that there's all these added fees that come across come through the process of trying to send something abroad. So if you're not just sending something through a blockchain network, you might have to send something that's more user-friendly, so you use an app, or you use a Bitcoin ATM, or you use some other third-party platform which comes with it OMRAT fees, which are fees that you would need for moving your fiat money into an exchange. You'd have exchange fees, then you'd have the network fees, then you'd have the off-ramp fees. All that to show is that it may be less expensive than your present options with your money transmitters, or like a MoneyGram or a Western Union, or it might be more expensive. You don't know, because part of it is all these hidden fees kind of come about with these technologies. So again, this is just to point out that sometimes while everyone's touting the potential for something, the way that the present capabilities of the technologies are playing out is you start to kind of see the same thing. So then we get into wealth building. I study and love studying wealth inequality. How do you create public policies to help communities build wealth, either household wealth or economic development? So this to me was an interesting topic because this was the one that resonated the most, especially with young professionals, college educated individuals. They want more avenues to build wealth in the United States. And so part of the issue with wealth building and cryptocurrencies was that there were a lot of comparisons in terms of thinking of cryptocurrencies as an investment the way that you would maybe think of a stock. Oh, I'm investing in crypto the way I'm investing in stocks. But the difference is that unlike a stock, it's not necessarily tied to a company's growth, to cash flow. It derives its value, at least with cryptocurrencies, from the idea that somebody else believes that it has value or will have value. So that means that for right now, if people believe that it has value, great, the number will go up. Unfortunately, the minute people stop believing it has value, that cryptocurrency, that plummets, and you get left holding the bag. So we've actually seen this with hundreds of cryptocurrencies to date. There was a really interesting example where, we had Miami mayor, New York City mayor were starting to tout a specific cryptocurrency. It was called City Coin, Miami Coin, and they were really excited. And these are elected officials that were promoting and embracing this and promoting it to their constituents. The idea was it was going to change the way that these cities operated. Fast forward a few months after they announced this and were promoting this, the value of that coin plummeted about 95%. It continued to plummet. We don't know what percentage of say Miami residents put their money into this, but the value plummeted so much so that I think last month, the one platform that held these coins on their exchange actually delisted the coin because it was actually, it was very risky to have something on there that was worth less than a penny at this point. So all that to say is it is very possible for something to be at a high and then completely plummet and you're left holding the bag. I think the other piece of this that's really important to point out is that one of the things that people talk about when it comes to cryptocurrencies is the benefit is that, it is accessible. It is more accessible than these other products and services. And because it is more accessible, that means that it is good, right? With more access, doesn't necessarily mean good, but okay, you have more access, Presumably the risk is the same for all, presumably, though we could actually argue with this. But one thing that's not widely discussed is that while the risk might be the same for all, the access might be the same for all, the impact of those risks would be felt differently. And that is because of the existing inequalities we see in wealth right now. The median household wealth of a white household is around $188,200. That's median household wealth. Now compare that to a Latino or Hispanic family, which is around $36,100. 188 versus 36. And then for a Black household, it's about $24,100. So if you're all investing $1,000 in cryptocurrencies and you start to incur losses, maybe if you're the median household with $188,000, that $1,000 loss doesn't mean as much to you. But if you have $24,000, $36,000, that $1,000 means a lot. So that's a really outsized negative impact. And so that's kind of what I mean is like, while access might be the same, risks might be the same, the impact of those risks might be felt differently if you don't have a security blanket. And I think the other piece too is really important to think about then is the way that the argument was going in terms of like how to build wealth. It was about individuals building wealth by their own decision making. Put your money here and that's how you build wealth. But historically, that's actually not the full picture. You need all of these different stakeholders and actors to be moving simultaneously to help communities en masse to build wealth. Sometimes that's public policies, sometimes that's their practices. And it's in conjunction with businesses, it's in conjunction with banks, it's in conjunction with all of these stakeholders. But we've actually missed out on really understanding the bigger picture of how we arrived at these inequities in the first place. And that is an important context to understand then how do we build? Because we've actually historically seen how we can build wealth en masse for huge like swaths of the population. So one way that I think about it, especially when it comes to communities of color, is thinking about wealth building policies, public policies that took place before the 1960s civil rights movement, so 1968, and then the policies that happened after. I actually think about the New Deal policies that happened around between like 1930, or the policies that took place around then, but there was a period where we actually saw tremendous wealth generated for households across the country between 1930s to those late 1960s. And part of it was because of New Deal policies. And you just think, oh, okay, these policies were great, whatever. But the bigger picture was actually that you had households who were, because of things like the GI Bill, because of innovations in mortgages, were able to buy houses, go to college, start businesses at scale. We saw this in our country. It was actually really successful. Then little by little, this post-1968 period, you start to see those asset building policies chip away. We start to kind of get rid of them. We start to see like people not be able to access them en masse the way that we used to. And unfortunately, this also aligned with those 1968 civil rights changes that we saw that kind of ended the practices of discrimination, that ended certain practices such that people could now access things that they were previously excluded from. And so now you end up seeing these like Latino Black populations that have access supposedly to these policies or programs and products and services, but they're just not offered with that much government support as they used to be. And so this is what I kind of call this era of predatory inclusion, where you had this history of explicit exclusion. You had this period where Black Latino families, because of practices like redlining, because of other discriminatory employment barriers, weren't able to access jobs, weren't able to buy homes. Therefore, they weren't able to build the wealth that they could pass down across generations. This period ends with these amazing civil rights like legislations and policies, but because they were like now being able to move on from this period of explicit exclusion, what you end up seeing is that now they get access to mortgages, now they get access to credit, but without the significant federal investments, this access often came with conditions that undermined the benefits, in many cases reproducing insecurity for these same communities. So an example of predatory inclusion, and this kind of is this idea of like access is always good. What you want to ask when it comes to access is the same quality of service like just as good. So I don't want just access, I want the same quality of service, or I want to ensure that the conditions don't put me in harm's way. So some examples that have come up is actually these for-profit colleges that pop up, which they provide access, and they are very important for providing access to a quality education. The problem though is then they also come with higher tuition costs, they come with loans that are riskier for that matter, they put people in more debt, and so those conditions, you know, somebody can still decide they want to do it, but they have to know that it comes with higher risks, higher costs. Payday loans. Payday loans are often short-term loans. They provide access to a loan if you need one, but it comes with higher costs, higher risks. And then we had the 2008 financial crisis where, you know, everybody was making this big push for access to home ownership, access to these subprime loans. And especially for Black and Latino communities, this was going to be their pathway to home ownership and wealth building. But that access came with conditions that compromised the benefits, such that those high risks ended up leading to the decimation of a lot of Black and Latino wealth in the United States that we're still recovering from. And so when you think about that period, this post-1968 period, it actually is really interesting to think about it from a Latino perspective, because this chart right here shows the Latino population in the United States by decade. You start to see a jump starting 1960s, 1970s, then 1980s, and it just grows and grows. The green bar is actually the Mexican population. All the other colors represent different Latino groups. But when you think about the fact that there was a period where there were massive asset building policies, then they all end. When Latinos were in the United States en masse, that was also when we started to see those policies kind of start to get dismantled, those programs start to get dismantled. And so Latinos in the United States haven't actually been able to benefit from a lot of these asset building policies, programs, services. And so when you think about why they might gravitate to alternatives, it is because that's probably what they know, it is probably what is accessible, and they're not necessarily being told about all of the risks and the drawbacks. And so part of these waves too, it's just thinking through, again, why policy really matters and understanding history really matters. You know, part of it was you started to see some immigration policies change in like 1965, 1986. You started to see things change after the dictator Trujillo ended up being assassinated in the Dominican Republic. So you started to see more Dominicans come in 3 different waves in the 60s, 70s, and 80s. You saw Cubans coming in the 60s, 70s, and 80s. And then you also saw, again, like this massive increase in Mexican population. And these are coming during this period again, where you start to see these policies being dismantled. And in the place, what you actually start to see emerge are alternatives. So when banks started leaving a lot of communities of color, you actually start to see payday loans, check cashing services, all of these different alternatives pop up that offer different services. I think now what's interesting is that there's potential that because we're moving into a digital age, access can actually mean very different things. You might not need the brick and mortar that we used to need before to have that like community banking relationship. You might have more options, but I think it's worth contemplating, you know, then when we're going digital, is digital always safe? And that's why these alternatives, it's kind of like there's the next iteration of what payday loans, check cashing services can be, is like, well, we're offering you access to financial transactions. We're offering you access to wealth building, but we're not necessarily telling you that those come with conditions. And so that's why I say, you know, cryptocurrencies are kind of, to me, the next part of predatory inclusion, because just as we see check cashing services and payday lender storefronts concentrated in Black, Latino, Hispanic, immigrant communities, we are now starting to see Bitcoin ATMs in Latino or Hispanic grocery stores. And then in other cases, we're starting to see them in neighborhoods, in Latino immigrant neighborhoods in Miami, Dallas, Los Angeles. And okay, you think, great, access. But again, Bitcoin ATMs actually come with high fees and high risks. Their transactions are about 7% to 21% per transaction. So if you're trying to use this as an easier way, like this actually also comes with its own risks. And so I say that to say that I don't like to end things on a negative note. I share all of this because it's important to think about risks and drawbacks as we start to think then, how do we build? How do we build or get access to good quality products and services? You know, we would want people that maybe felt that they couldn't access basic banking services, which are safe. You know, how do we get them to be able to access those things? And so one of the things I think about and I really talk to policymakers about is, you know, when we're thinking about not just cryptocurrencies, but emerging technologies, because this is going to be a trend that continues, whether it's crypto, another fintech product, AI. The thing is, we're here at this phase now where everything is going to be in the iteration of technology. Then we have to start to take a critical approach in our education and seek diverse perspectives. I think part of why I liked studying cryptocurrencies was you had to not just understand the technology, you had to understand the finance, economics, history, sociology, like all comes tied together, psychology, to understand like why are people gravitating towards something. Then you have to interrogate whether the technology's present capabilities meet up with the potential. I think we all want to be optimistic, and I think optimism is important, especially if we want to support innovation. But if we're thinking about putting products and services in the hands of people, then we also have to think about the risks and the drawbacks, not to stop this technology or innovation, but so much so that we are at least planning for how do we address it, how do we minimize risks, how do we minimize those things that could impact people from losing their hard-earned money. And then consider the source making the claims. So I kind of go back to this example again. We used to see these celebrities and these athletes and all these people touting these things, industry leaders, but what monetary incentive did they get for doing this? What do they benefit from giving you only part of the information, not all of the information? So as we start to think about emerging technologies, it's really important to question before hyping something up, because it could be really dangerous if we're not really being honest or at least completely forthcoming about all of the potential risks and drawbacks. And I think the last piece that I leave folks with, because I think a lot about access to wealth building avenues and financial services for communities, is that I do think that there are more direct ways to address financial inclusion. Before embracing cryptocurrencies or technologies like that that are emerging, it's important that we first clarify what problem are we trying to solve. And I started this by saying, you know, when we're talking about financial inclusion, are we talking about unbanked? Are we talking about wealth building avenues? What are we talking about? So clarify the problem that you're trying to solve, and more importantly, why. Because part of the issue that we often see is like we're now starting in this place where we see a technology and we're trying to retrofit it to fit existing problems. Like, oh, look at this new technology. It can do all of these things, and it turns out we're actually missing the direct pain point. Instead, we should be starting with what problem are we trying to solve, and more importantly, why. Can or should cryptocurrencies or whatever technology we're talking about solve these problems, and are the risks greater than the benefits? And the last piece to me, which was, could these problems be solved without cryptocurrencies or technologies? And again, we're talking about financial inclusion, and I'm like, we actually have so many other options that we could be talking about that are safer, that we already have evidence that they work. So how do we get those products and services in the hands of the people that need them? So that's just a way to start thinking about it, because I think that crypto is not the end of it. Like, I don't think crypto is ever going to disappear. I don't necessarily think the hype will ever be as high as it used to be, but we're going to see these iterations of new technologies emerge, people making promises of all of these different things that, you know, are going to lead to wealth building or financial transactions. And so we should be willing to ask the hard questions in order to understand, like, then what options or opportunities should we be seeking and looking forward to. So with that, I am done and would open it up to questions.
Okay, do we have any questions? See a hand back here in the back. Anna Karen?
First of all, thank you so much for sharing your insight. I have two questions for you. You briefly mentioned about the consumer protection in the city of Chicago area. for people of color. What specific municipality level public disclosure or educational program does the city provide to marginalized citizens beyond and above Black and Latino, and to educate them about cryptocurrencies?
Sure. So at the municipal level, there's not a lot that can actually happen. It's typically at the state and the federal level. But I do think at the municipal level, one basic thing that people can do, if you're a mayor, government staffer, government official, is not necessarily embrace or support something publicly such that your statements could be misleading to consumers, to your constituents. That's just like a very base level thing, because we saw this with Miami, New York, and actually Chicago, where there would be statements to say like, crypto will lead to financial inclusion, like very boldly like that. And if you're a low-income person who is looking for avenues to make transactions, build wealth, you could take that statement and believe that something is safe. So I think just very baseline is like really like for elected officials to be like mindful of what they are saying and how constituents could misconstrue or understand what they're saying. And then in terms of financial education, I do think that there is something that they could be putting out there that kind of at least provides a different source of information for how to understand this space. Because part of the issue I saw when it came to financial education was people would say, oh, people just need to educate themselves. But unfortunately, a lot of the sources that were out there were basically created by industry actors who have incentives to want to get these products in front of you, and they weren't necessarily highlighting all of the risks that come with cryptocurrencies. So I do think that municipal level, if they know that people are looking for alternatives, they can just put the basic information of this is how they operate, these are the risks that you should be aware of, not to stop you from making your own personal decisions, but to ensure that you as a consumer have everything that you need to know before you make a decision.
Okay, the next question is, what is your personal opinion about El Salvador's initiative to make Bitcoin as national currency from U.S. Latino/public policy perspective?
Yeah, that is a fascinating use case, or just like case study of what is happening in El Salvador. I think that they could have done so much more with their investments. That could have been in probably any other initiative other than Bitcoin. You'll actually find right now there's a lot of reports that are coming out from more like academic, economic academic articles and journals that are starting to see like if people actually end up using Bitcoin even for cross-border remittances or for everyday goods and services, and the numbers are just so low. So in terms of all of that money that went into something that their residents aren't even using, I actually would cite that as a failure. And especially for the argument that, oh, crypto, Bitcoin will be good for unbanked individuals. El Salvador's unbanked population is about like 60-70% of their population is unbanked, and they're not using it still. They prefer US dollars. So I just think that is just a fascinating like a case study to show like how you can maybe be so gung-ho for something and your population still isn't using it. Part of it could have been the implementation and the rollout. You know, there could be something to be said about that. But the other part too was like it wasn't addressing the actual specific needs and the pain points of the individuals.
Other question. Dr. Clark has one online.
So I have a question from one of our online participants, from Daniela, and she wants to know, what do you think we can do to improve financial education for marginalized groups, whether in terms of cryptocurrency or other investments? How can we better educate people about the risks and advantages of different financial tools?
Sure. So I spoke to this a little bit. That's definitely like a role that I think I would say people in authority positions could certainly do. So we have this in, you know, elected officials that could be doing that, providing more input and resources out that just provide all of the information and provide a balance to what we have right now, which is a very skewed set of resources that are more industry created. There are also other like federal agencies that could be putting this stuff out as well. And I think too, as working with a lot of like local community-based organizations, civil rights organizations, where maybe technology and finance isn't their area of expertise, but they're going to encounter individuals that they work with that are interested in this information. So educating them as well to be able to put out information. I think financial education has been such that it's been solely focused on just the finance aspect of it, but now given where we are in our economy today, everything is moving more digital, and so we're going to start to see more issues intersect with not just finance but with technology. And so we're going to have to start becoming more well versed in this fintech type space, and so part of that is, you know, within our like education and curriculums at university levels, providing more avenues for people to understand how things are going to intersect with technology, what additional risks come with technology. So it's not just finance that we now need to improve our education around it, it's also the technology. And I would also just add, yet again, because I think a lot about public policy, there's the financial education element that I think is important, but there's also this other element in terms of policy is how do we get more products, services in the hands of people, whether it's to make financial transactions or to build wealth. We need more asset building policies in the United States to support people who want to buy a home, to go to college, to start a business. Access to capital is something that I hear a lot. So sometimes, you know, it's not that you lack financial education, sometimes it's maybe you lack a network, and sometimes it's that you just lack the opportunity to be able to do these things. And we've had it before, we've seen it throughout our history, that these policies were really impactful in creating a middle class in America, creating a class of people who are to build wealth and pass it down across generations. We should be building policies that at least provide those avenues in addition to financial education.
We have another question down here.
Hi, quick question. Does the low-income white population act the same way as the Latino or the African American or Black?
Yeah, that's a great question. That actually is much harder to be able to gauge from the existing like surveys, because even the one that I found with like Ariel Schwab, for example, when it was looking at Black and white investors, they sampled investors with their average income around $99,000 for Black investors, $106,000 for white investors. So often these surveys oversample for wealthier investors. So again, even as we're talking about like, this is going to be great for the unbanked, it's like a lot of the surveys are actually not even capturing these low-income individuals. We do have the FDIC survey, which did show that a small percentage of unbanked populations are like that percentage is like at 2 or 3%, but it's starting to grow in terms of starting to gravitate towards cryptocurrency, but it's still a very, very small percentage. But I wish, again, to that, like my point earlier, I wish there was more data, because right now we're oversampling actually wealthier.
Other questions from the, yes, over here. Anna Karen, we've got a question over here.
It might not be related, but we have seen in several states this move against diversity, equity, and inclusion. And you are talking about financial inclusion, but it really, as you are saying, is more comprehensive type of inclusion that includes the political and many other dimensions.
Mm-hmm.
How you square this need for more inclusion against this increasing fragmentation and move against what is needed, I would say?
Mm-hmm. That's a very hard question. So thank you. I grapple with this on my day-to-day because I do think they are intertwined, especially because I look at inequality, and it often, in the United States at least, is very much tied to racial ethnic backgrounds. And so that's actually why I focus on a subset of populations. Another way I could have done it is focus more on like class-based dynamics, but again, it was lack of data on some of this stuff. I think part of it is this is a moment in time. You know, if you study history, there are moments where we have progress and there's kind of a shift back, just a few steps back but we have a few steps back. Then there's progress, and then just a few steps back. So these debates are really important, but they're caught up in a moment in time where I do think we're going to hit another period in a few years where we have progress again, at least when it comes to racial equity and more broadly economic equity. But it's going to take a concerted effort. You know, you need to have an educated class of individuals that are learning about these topics in an interdisciplinary manner. Oftentimes when we're talking about, again, like finance and tech, it gets removed from the broader history or sociological understanding of the way that power and economics have operated in this country. And so we need to have a further understanding from like our young people. And then I think the other piece of it too is civic engagement. Part of why these things move in the direction that they move is via public policy and practices. And public policy only moves when a citizenry is engaged. And so how do we work with local grassroots organizations, community-based organizations to get people mobilized, to try to push certain policies? That's a long-term effort and it takes time. Nothing about this is ever a silver bullet. But I think about it as like we're in a moment of time of a broader landscape of history. And so I think if people stay optimistic and they keep pushing for policies that create equity, we will get there eventually, but we're just kind of maybe in this backlash moment right now.
Other questions? I have a question, if you'll permit me.
Sure.
The thesis that you've said today is one that considers disadvantaged groups, communities of color. And one of the points that you made was that there is a misperception among users in general about there's regulation of the cryptocurrency. You've also made a point today about the importance of educating those that use cryptocurrency.
Mm-hmm.
So my question to you is, given that cryptocurrency, as you have argued today, can be used as a financial asset, either through transactions or for an investment to accumulate value, are you, when you say policy, are you advocating regulation in some sort
Mm-hmm.
that regulates this market, so to speak, like other financial assets or under regulate SEC,
Yeah.
primary markets, secondary markets, and so forth? Is that what you feel would be needed in addition to financial education?
Sure. Well, when it comes to policy and regulation, I think about the fact that we do have an existing framework when it comes to investing in assets that we could already borrow from. And so right now, there is this battle in Washington over whether the regulator of cryptocurrencies is either the SEC, the CFTC, or a combination of both. But at the very least, one thing that we could do is ensure that the SEC or the CFTC have the resources that they need to be able to go after bad actors, first and foremost. So we've already seen a lot of fraud and scam in this space. We have a lot of bad actors. Why don't we empower these existing agencies to go after the bad actors? That's just one basic area where you could just put more resources into these agencies to do that and to just target the bad actors. On the regulation side, I do think that one of the things that is just sorely needed is just basic consumer protections, and some of it is, modeled off of what we see with the SEC in terms of like investor protections. So the way that we require certain disclosures of companies, that we require that they put all of the risks that they might have, you would just require that of cryptocurrency companies. But I think we could also just go a step further in that we also see something that emerges in this space is that there's a lot of hidden fees. I think about this from the perspective of a consumer, like maybe I want to put my money into something regardless of what I know in regards to the risk. But if it's more expensive than my existing options, I would probably not. But I want to be able to make that decision for myself. And so being able to have hidden fees listed out very clearly, total cost of fees in one place, that's a very basic additional consumer protection that could be added.
I'm curious, not trying to put you on the spot, but I guess I am. Have you used cryptocurrencies?
So I don't own or trade them. I have family members that own and trade them. I have friends that own and trade them. So I've actually been able to watch the platforms and how to use them via people that I know. And I was probably that annoying friend that was like, oh my God, this is risky, and they still did it anyway. So part of it is like, I don't shame anyone for wanting to try something new. It's just more that when we think about populations in mass, just ensuring that they have the information that they need to be able to make a sound decision.
Well, I guess I'll take a contra point of view here. I'm a free markets guy. Financial asset prices are governed by risks and returns. And so I don't think you're saying this, but if I invest in a company, shares of stock, I should be knowledgeable enough to understand that. And so I do not think the government should be obligated to come in and preserve the value of my investment. And so where there are hidden fees, and these are transactions costs, the way I would say that.
Yeah.
And if there are high transactions costs, that is, to me, a reflection of the risks of the investments.
Right.
And so I think we have to be careful. I understand there's complexity of cryptocurrencies, but unfortunately, from your data, you indicate that given the differences of wealth levels between different ethnic groups, African Americans, Latinos, and whites, that an investment with this much risk can have a disproportionate effect on the value of the wealth position of the individual.
Yeah.
So I think personally, my point of view, financial education is needed as well, but
A holistic
Yeah.
approach.
I'm just curious. You don't have to raise your hand if you don't want to, but anyone in the audience is dived into cryptocurrencies? Okay, very good. We've got some financial professionals.
It's okay
over
if you
here.
have. I told you, I
I'm
have
not
family
saying
and
it's
friends.
not. I'm not saying it's not. Do we have any more questions online, Dr. Clark?
Okay.
Okay. Well, want to thank you on behalf of the university,
Yeah.
the Sanchez School of Business, and the Western Hemispheric Trade Center for an outstanding presentation this afternoon.
Thank you so much for having me.
And is our tradition, we would like to present you with this token of our appreciation. It's a globe
Oh my gosh!
representing
Thank
the
you.
internationalness of the university. We hope that you will accept this, and this will commemorate your speech today.
Thank you so much.
so much.
Thank you so much.
I think our next session starts in about 20 minutes, so you've got a brief break here. Thank you for coming again.